Welcome to the deep dive, and today we've got something really interesting for you.
Yeah, this one's pretty fascinating.
We are brought to you by Woven Mining.
Oh, yes,
You
absolutely.
know those folks that are really changing the game with data and AI in the mining world?
Yeah, they're doing some really incredible stuff.
So if you're out there and you need to make smarter decisions,
Mm-hmm.
and you've got mountains and mountains of data,
Yeah,
you know who to call.
woven mining,
Woven Mining, that's right.
for sure.
But today,
Yeah.
we are going deep into something that I know keeps mining executives up at night.
Oh, yeah.
Asset impairments.
Asset impairments, that's right. We're talking about those moments when a processing plant or, mineral deposit suddenly loses value.
Yeah.
Sometimes a lot of value.
Oh, yeah, a lot of value.
And we're going to explore how a new research paper
Okay.
actually used data to analyze what causes these financial hits.
Love it.
Yeah.
So we've got excerpts from this paper published in Resources Policy, and the authors looked at 266 impairments
Wow.
declared by mining companies listed on the Toronto Stock Exchange
Okay.
over a 13-year period.
Got it.
So they were basically on a mission
Right.
to crack the code of impairments using data as their detective's toolkit.
I love that analogy.
Right.
Yeah.
I mean, I think this is so interesting because we're
Yeah.
taking this data-driven approach
It's all about the data.
to understanding this phenomenon.
Exactly.
So one of the first things they did was categorize the reasons companies gave for these impairments.
Right.
And the results were pretty stark.
Yeah. Over half of the impairments and a third of the total value lost
Wow.
were attributed to one major factor,
What's that?
falling metal prices.
Okay, that makes sense. Mining is a commodity business.
Sure.
Prices fluctuate. We know that.
Absolutely. Yeah. It's kind of like the nature of the beast.
But if it's so common, shouldn't companies be better at predicting these price drops?
Well, that's the million-dollar question, isn't it?
Yeah.
The researchers really dug into that data,
Yeah.
and they found that maybe, just maybe,
Okay.
the forecasting models being used
Yeah.
aren't as sophisticated as they could be.
Okay.
It makes you wonder if there are avoidable mistakes being made
Yeah.
when trying to predict the future of metal prices.
That's fascinating.
Yeah.
It seems like there's a huge opportunity for improvement there.
Big time.
But they didn't stop at just metal prices.
No, they didn't stop there.
They also compared mines to major infrastructure projects,
Okay.
like bridges and tunnels,
Right.
to see if there were any parallels in what causes cost overruns.
And I'm curious about that. What did they find?
Well, they found a striking similarity.
Okay.
Mines in developing countries, just like large infrastructure projects in those regions,
Mm-hmm.
tended to have larger impairments.
Interesting.
So this suggests that the inherent uncertainty in those environments
Yeah.
plays a significant role in the risk of these financial setbacks.
That makes sense.
Right.
More volatility in those kinds of places.
So location
Uh-huh.
clearly matters.
Yeah.
But what about the type of mining operation?
Okay.
Does trying something completely new,
Yeah.
like a new mining technique, or venturing into a region where a company has no prior experience,
Right.
increase the risk of impairment?
Well, they looked at that too,
Okay.
using their data-driven approach.
Right.
They categorized these ventures as non-routine.
Okay.
And they found that while there was some connection to larger impairments,
Hmm.
it wasn't as strong as you might expect.
Really?
Yeah.
That's surprising.
It is a little bit,
Why
yeah.
do you think that is?
Well, one theory is that the impact of those non-routine factors gets overshadowed by the sheer magnitude of those metal price swings we talked about earlier.
Right.
It's almost like those price drops are such a dominant force
Right.
that they kind of mask the effects of these other
It's
factors.
the time to hear a whisper during a thunderstorm. But even though the link wasn't as strong as expected, it's still something mining companies need to consider carefully.
Oh, absolutely. And this is where I think data analysis and AI can really come in.
Okay.
By leveraging the power of data, companies can develop more robust forecasting models,
Mm-hmm.
understand the nuances of different locations,
Yeah.
and make more informed decisions about those non-routine ventures.
That makes perfect sense. Now, you know me, I love a good real-world example.
Of course you do.
Does the paper offer any specific cases that illustrate these points?
It does.
Right.
Remember the Pascua-Lama mine project?
Vaguely.
Refresh my memory.
Yeah.
Okay, so it was supposed to be this massive gold and silver mine straddling the border of Chile and Argentina.
Okay.
Huge project.
Yeah.
Well, it ended up being a cautionary tale.
Oh, no.
Massive cost overruns, environmental concerns.
Wow.
And ultimately, the project was suspended in 2013.
I see.
And this single project, with all its complexities,
Right.
accounted for a significant portion of the total impairment value in the study.
Wow. That's a sobering reminder of just how much can go wrong, even with the best laid plans.
It really is.
Right.
And it just underscores how vital forecasting, risk assessment, and data analysis are when making these monumental investment decisions.
Yeah.
Not just in mining, but in any industry, really.
And speaking of data analysis,
Yes.
it's worth highlighting that this entire deep dive was inspired by the work of our sponsor,
Yes.
Woven Mining.
Woven mining.
They're doing amazing work in helping mining companies use data and AI to navigate these complexities.
Absolutely. They're at the forefront of bringing data-driven decision-making to the mining industry, for sure. If you're in this space, they're definitely the folks to talk to.
Yeah, you need to get in touch with them.
Absolutely.
Woven Mining.
Yeah.
All right, so we've talked about some of the high-level findings of this research,
We have.
but I want to go a little bit deeper
Okay.
and understand how they actually use data to reach these conclusions.
Let's do.
This whole conversation really emphasizes just how critical data analysis is becoming in the mining industry. But I'm curious, how did the researchers in this paper actually use data to reach these conclusions? Did they just read through a bunch of company reports?
Oh, it was much more systematic than that. Remember, they analyzed 266 impairments. So first they had to collect data on each of those impairments from a variety of public sources like financial statements and annual reports. And then they had to meticulously categorize the reasons given for each impairment.
That sounds incredibly time-consuming. I can only imagine the amount of data they had to sift through.
Exactly. But that's the foundation of any good data analysis. You need that raw material to work with, and it has to be accurate and well organized. And this is where things like natural language processing can come in handy, helping to automate some of that data extraction and categorization from those lengthy reports.
It sounds like Woven Mining could really help companies streamline that process.
Without a doubt, they have the expertise and the tools to not only gather that data, but also to clean it, structure it, and make it usable for analysis.
So once the researchers had all this data categorized, what do they do with it?
That's where the real fun begins. They used a variety of statistical techniques to test their hypotheses and uncover those hidden patterns in the data. One of the key methods they used was linear regression.
Linear regression is all coming back to me now from my college stats class. But for our listeners who might not be statisticians, can you give us a quick refresher on how that works?
Of course, imagine you're plotting data points on a graph. Linear regression essentially tries to draw a straight line that best fits those data points. And this line can then help us understand the relationship between two variables. For example, the researchers might have plotted the size of the impairment on one axis and whether the mine was in a developing country on the other, and linear regression could then tell them if there was a statistically significant correlation between those two factors.
So it's about finding those statistical links, those correlations that might not be immediately obvious just by looking at the raw data.
Exactly. And this is where data visualization tools can be incredibly powerful, allowing you to see those patterns and trends emerge from the data in a way that's easy to understand.
That makes a lot of sense. So using linear regression, they confirmed that those mines in developing countries tended to have larger impairments, right?
That's right. The data backed up their initial observation, giving it more weight and suggesting that there's a systemic issue at play. And this kind of insight can help mining companies make more informed decisions about where to invest and how to manage risk in different regions.
But linear regression wasn't the only tool in their data analysis arsenal, was it?
No, they also use something called an impairment index to measure the relative size of impairments for each mining project. This allowed them to compare impairments across different projects, even if those projects had vastly different initial values.
So it's a way of standardizing the data, making it more meaningful and comparable. How exactly did they calculate that index?
They took the total sum of all impairments for a particular project over the entire study period and divided it by the sum of those impairments plus the asset value at the end of the period. This gives a number between 0 and 1, with 0 representing no impairments and 1 meaning the project's value was completely wiped out.
That's a clever way to level the playing field, so to speak.
Yeah.
It allows you to see which projects were hit hardest proportionally, regardless their initial size.
Exactly. And this is just one example of how data can be manipulated and analyzed to reveal hidden insights. By using these kinds of metrics and statistical techniques, the researchers were able to paint a much richer picture of the factors driving mining asset impairments.
It's really impressive how they combine this meticulous data collection with sophisticated analysis. And it's a great example of how data can be used to move beyond intuition and anecdotal evidence to reach more robust conclusions.
I agree, and this data-driven approach is becoming increasingly essential in the mining industry as companies face more and more complex challenges.
Speaking of challenges, did the researchers offer any practical advice for mining companies based on their findings?
They did. They highlighted several key areas where companies can improve their forecasting and decision-making to reduce the risk of impairments. One of the most important recommendations was, unsurprisingly, to be more conservative in their price forecasting.
After all that talk about metal price volatility being the #1 culprit, that seems like a no-brainer, doesn't it?
It does seem obvious, but you'd be surprised how often companies get caught up in the excitement of a commodity boom and overestimate future prices.
So it's about tempering that optimism with a dose of data-driven realism.
Exactly, and that's where companies like Woven Mining can be a real asset. They have the tools and expertise to help miners create more robust and realistic price forecasts that take into account historical trends, market volatility, and other crucial factors.
So it's not just about being conservative, it's about being smart and data-informed.
Precisely, the researchers also stress the importance of understanding the specific risks associated with different locations. They found that mines in developing countries had a higher likelihood of experiencing large impairments, suggesting that companies need to be extra cautious when investing in these regions.
That makes sense. Developing countries often have more political and economic instability, which can make it challenging to predict costs and manage risks.
Exactly. And this is where having access to reliable data and sophisticated analytical tools can make a big difference. It's about having a deep understanding of the nuances of each location and making informed decisions based on the best available information.
So data can help companies not only predict metal prices more accurately, but also navigate the complexities of operating in different regions.
Absolutely. And the researchers had one final piece of advice learned from past mistakes. They suggested that mining companies should conduct thorough post-mortem analyses of projects that experienced impairments to understand what went wrong and how to prevent similar issues in the future.
It sounds like a valuable exercise. Analyzing those past failures can provide crucial insights for future decision-making.
It is, and it's a reminder that data isn't just about looking forward, it's also about learning from the past. By analyzing those historical trends and patterns, companies can identify potential red flags and make more informed choices.
This whole discussion has really opened my eyes to the power of data in the mining industry. It's not just about numbers and spreadsheets, it's about gaining insights, managing risk, and making smarter decisions.
I agree, and it's exciting to see how companies like Woven Mining are leading the way in applying these data-driven approaches to solve real-world problems.
They really are at the cutting edge of this field. Now, before we move on, I want to circle back to something you mentioned earlier, the idea of using data and AI not just to analyze past impairments, but to predict future ones.
That's right. It's a rapidly evolving field, and it has the potential to revolutionize the way we approach risk management in mining.
Can you elaborate on that a bit more? How could AI be used to predict these future impairments?
Imagine an AI system that could analyze vast amounts of data, not just financial reports, but geological surveys, market trends, political climates, even social sentiment. By looking for subtle patterns and correlations, these algorithms could identify potential warning signs that a particular project is heading toward an impairment.
It sounds almost like science fiction, but I guess that's the power of AI. It can see things in the data that humans might miss.
Exactly, and that's why it's such a game changer. It's about moving from a reactive mindset to a proactive one where we can anticipate problems before they arise and take steps to mitigate them.
So instead of just reacting to impairments after they happen, we could potentially get ahead of them.
Precisely, and that's where companies like Woven Mining are making a real difference. They're developing the tools and expertise to make that vision a reality.
It's fascinating to think about the possibilities. Now, speaking of possibilities, the researchers also dug into those non-routine operations we talked about earlier, the ones that involve venturing into new regions using new mining techniques or experimenting with new mineral extraction methods. Can you refresh my memory on their findings?
Of course, they found that there was indeed a statistical correlation between those non-routine operations and the size of impairments.
Okay, so there's a higher risk associated with trying new things, which isn't surprising. But what exactly did they consider non-routine?
They looked at three main factors: non-routine regions, non-routine mining methods, and non-routine mineral recovery methods.
Okay, let's unpack those one by one. What exactly did they mean by a non-routine region?
That refers to a geographic region where the company had no prior experience operating. So, for example, if a company had only ever mined in Canada and then decided to open a mine in, say, Peru, that would be considered a non-routine region.
Makes sense. You're essentially entering uncharted territory, which always comes with a higher level of uncertainty and risk.
Exactly. And that uncertainty can translate into difficulty accurately forecasting costs, managing logistics, and navigating the regulatory landscape.
So what about non-routine mining methods? What does that encompass?
That refers to using a mining technique that the company had never used before. For instance, if a company had always used open pit mining and then decided to try underground mining for the first time, that would be considered a non-routine mining method.
Right, each mining method has its own unique set of challenges and complexities. So trying something new inevitably introduces a learning curve and the potential for unforeseen problems.
Precisely. And then you have non-routine mineral recovery methods, which involve using a new technique for extracting the desired minerals from the ore.
So if a company had always used a traditional method like flotation and then decided to experiment with a newer technique like bioleaching, that would fall into this category.
Exactly. New extraction methods often involve more complex processes, specialized equipment, and potentially higher operating costs, all of which can increase the risk of things not going according to plan.
So it seems like anytime a mining company steps outside its comfort zone and ventures into non-routine territory, whether it's a new region, a new mining method, or a new extraction technique, they're increasing their exposure to risk.
Absolutely. And this is where data analysis and AI can play a critical role in mitigating those risks. By analyzing historical data, companies can gain a better understanding of the challenges associated with different types of operations and make more informed decisions about whether to pursue those non-routine ventures.
It's all about weighing the potential rewards against the potential risks and having a solid plan in place to manage those risks.
Exactly. And that's where companies like Woven Mining can be invaluable partners. They have the expertise and the tools to help mining companies navigate these complexities and make smarter data-driven decisions.
Their work really is impressive, and this entire conversation has been incredibly enlightening. It's amazing to see how data can be used to understand, analyze, and even predict these complex financial events like asset impairments.
I agree. It's a testament to the power of data and the importance of embracing data-driven approaches in today's business world.
But before we wrap up, I want to leave our listeners with one final thought-provoking question. If we can use data to analyze past impairments and identify potential future risks, what are the implications of using this knowledge?
That's an important question. As data becomes more and more central to decision-making, we need to ensure that we're using it responsibly and ethically.
Exactly.
Yeah.
For example, if we can predict that a certain mine is at high risk of impairment, what responsibility do we have to share that information with investors, communities, and other stakeholders?
It's a complex issue with no easy answers, and it's one that we'll need to address as a society as we continue to advance our capabilities in data science and AI.
I agree. It's about using these powerful tools in a way that benefits all stakeholders and contributes to a more sustainable and equitable future.
Well said. And with that, I think we'll leave our listeners to ponder those important questions.
Indeed, thanks for joining us on Deep Dive, brought to you by Woven Mining. Keep those brains curious, and we'll see you on our next adventure.
It's a crucial point, as we become more adept at using data to predict and analyze these complex events, we also need to be mindful of the ethical considerations. It's a conversation we should be having across all industries, not just mining.
Absolutely. Data ethics is a field that's gaining more and more attention, and for good reason, as AI and machine learning become increasingly integrated into our decision-making processes. We need to ensure that these tools are being used responsibly and transparently.
Now, shifting gears a bit, I wanted to touch on another fascinating point that the researchers made. They mentioned that some impairments might actually be hidden during periods of rising commodity prices. Can you shed some light on that?
Sure. Remember, an impairment is only declared when the estimated value of an asset dips below its book value. So when metal prices are soaring, those inflated prices can mask underlying problems that might be brewing beneath the surface, like cost overruns or lower than expected ore grades. It's like a temporary illusion of success, right? The rising tide might lift all boats, but it doesn't mean all those boats are seaworthy.
Exactly. And the researchers found some evidence to support this idea. They observed that the number of impairments tended to decrease during periods when commodity prices were on an upward trend.
It makes sense if everyone's riding high on profits. It's easy to overlook those warning signs.
Yeah.
But what happens when the commodity bubble inevitably bursts?
That's when those hidden impairments come home to roost. Suddenly, those assets aren't worth as much as everyone thought, and companies are forced to make those significant write-downs.
And that can be a rude awakening for investors who might have been lulled into a false sense of security by those rising prices.
It certainly can, and it underscores the importance of looking beyond the surface and really digging into the data to get a true understanding of a company's financial health.
This is where data analysis can be so powerful. It can help us see through those illusions and identify potential problems before they turn into full-blown crises.
Absolutely. It's about using data to make more informed and resilient decisions, even when the market seems to be sending positive signals.
This has been such an insightful deep dive. We've explored the reasons behind mining asset impairments, the crucial role of data in managing and even predicting those risks, and the ethical considerations that come with this increased reliance on data.
It's been a pleasure dissecting this research with you, and I hope our listeners have gained a deeper appreciation for the power of data analysis, not just in the world of mining, but in any field where decisions are made under uncertainty.
I couldn't agree more. And if any of our listeners are interested in harnessing the power of data and AI to transform their mining operations, I highly recommend reaching out to Woven Mining. They're true pioneers in this space, and we're grateful for their support of the deep dive.
They really are pushing the boundaries of what's possible with data in the mining industry.
And to all our listeners, keep those minds curious and engaged. We'll see you on our next deep dive.